Good morning, everyone, and an incredibly warm welcome to today's very special interview on combining Bitcoin and gold in Bold, hosted by ByteTree. After 5 years of incredibly hard work, the Bold Index, the Bold ETP, launched on the London Stock Exchange this morning at 8 a.m. So it's been trading for about an hour, and this is just momentous for all of us, and especially Charlie, our founder and the creator of the Bold Index. Charlie, thank you and welcome today.
Thanks, Kit.
Now, we're here to talk about the world's two most significant alternative assets, gold and Bitcoin, one backed by history, one by technology. And our special guest today is Izabella Kaminska. She ran the award-winning Alphaville team at the FT for 13 years before setting up the Blind Spot, an online platform bringing together finance, journalism, and undercovered ideas. She started as a Bitcoin skeptic, but over time has come around. So it's the perfect person to join us today as gold breaks record highs and Bitcoin sits quietly in the background for now. Thank you very much for joining us, Izzy.
Happy to be here. Thanks for having me.
Now, Izzy, I think you started at Alphaville, probably my favorite source of financial intrigue and information online in October 2008. So one of the most interesting places to work at one of the most interesting times of the last few decades. How was that?
Oh, it was very memorable, not least because there was a morning breakfast trolley, so we had free food to compensate for all the long hours.
Yes, long hours, I imagine they were. Now, today, Charlie, I think you're going to kick us off. You're going to present Bold to us. Izzy might nudge and knock you along the way, and then we're going to get into the macro discussions around Bitcoin and gold. Is that right?
That's right, and I hope Izzy doesn't tear it apart because this is our moment. But she's an independent journalist, and we're not in control of her. Who knows? So thanks, Kit. Bitcoin and gold. Today is Tuesday, the 13th of January. For posterity, and we launched on the London Stock Exchange this morning. Of course, we're talking about the Bold Index today, and this is not an investment advice. So let's kick off with a quote from Ray Dalio. He said, "I'll take the gold and I will sprinkle a little bit of Bitcoin into that mix too." And hopefully over the next 10 or 15 minutes, that will become clear why he said that. So at ByteTree, we have the money map, and this is how we build portfolios. We like to diversify not just by country and by sector and by stock, but also to try and populate these four groups driven by interest rates and inflation. If inflation's high, we believe that Bitcoin and gold do quite well. If inflation's low, then it tends to be bonds and equities that do quite well. If it's a risk-on conditions, Bitcoin and value, that would be financial stocks and also heavy industry and commodities, will do well alongside equities and growth stocks. And if we've got a declining economy, then golden tips, bonds and high quality stocks would do well. So blending these four things is never a bad thing to do. And it struck me, having been a gold guy for 25 years, that when Bitcoin came along, I became interested in it. And it took some time for it to sink in, but these assets are fundamentally different. And the reason why they're not particularly correlated, and in fact have persistent low correlation, is because Bitcoin's risk on and gold is risk off. But they both like inflation. They're both monetary assets. They're both highly liquid with limited supply and those kinds of things. So, it dawned on me some time ago, let's put them together and see what happens. So to do that, I chose to be risk weighted. Yeah, you could, if you were really clever and knew what was going to happen tomorrow, you could decide whether to own gold or Bitcoin. But given we don't know what's going to happen tomorrow, I just wanted to have the same amount of risk in each asset. And with highly liquid assets, to use inverse volatility makes a lot of sense. The volatility of Bitcoin has come down considerably over the years. It's now in the mid-30s, and gold has been pretty consistent. A little bit higher today than normal because gold's so exciting, making an all-time high today. So we have this magic formula, very simple formula that I hope we can all solve at home. But you plug in, or we don't do it, our index company, so that's Kaiko Vinter, based in Sweden. They plug in at the end of each month the volatility of Bitcoin and the volatility of gold. They do that magic maths, they do 1 over and add them together and get 855. That's what they did at the end of December. Then they do a little calculation, which is just, with the colors, you should be able to follow that. And you end up with the weight. And this is straight out of a CFA textbook. We did not invent this. Inverse volatility using 360-day volatility. And the result of that is the weight of Bitcoin, and obviously gold is the reciprocal of that, is shown over the last 8 years simulated. The product's only been trading in Switzerland since 2022, April 2022. So, but nevertheless, it's, this is what it would have been had it existed at the time. And the weight of Bitcoin has been steadily rising since 2018 when the volatility was extremely high. And as it's been coming down and converging with the volatility of gold that's been going up, the weight of Bitcoin has got to 35% in the Bold Index. Now, there's another thing to consider, and that's the real world. So in the real world, Bitcoin prices and gold prices are moving every day between our rebalancings. And when we see the black line, which is the actual daily weights against the green target weights, in a good Bitcoin month, it will spike up, and in a bad Bitcoin month, it will spike down for the relative performance of those two assets. And so, for example, in March 24 or in November 24, Bitcoin did very well. So when it came to rebalancing, it was a matter of selling Bitcoin and buying Bitcoin within the Bold Index. And conversely, in March 25 and in fact in November, Bitcoin had done very badly, and so it was added to the index. And we believe that that process adds quite a lot of value because the two assets have low correlation. And I think it's an important point to make here that Bitcoin and gold are pretty unique in this. I mean, big institutional investors use rebalancing transactions and things like bonds versus equities, which are supposed to be uncorrelated, although haven't been in the last couple of years. And if you did this with Bitcoin and Ethereum, nothing would happen. You wouldn't get any excess return. And if you did it with gold and silver, you wouldn't get any excess return. You just get the average return. But because these two assets tend to work against each other, you get quite a considerable excess return, which we'll show you in a second. And there we have it, the Bold Index over the last 8 years, and Isabella's eyebrows are already rising. As you can see, my start date on this chart very cheekily selected, which is the high of Bitcoin at the end of 2017. And I do that not just to show off the returns of Bold, but if you basically went any time before that, then Bitcoin would be off the charts. And my justification is that this is 8 years of data in a period where Bitcoin's been behaving more normally than it did pre-17, when it was very much in its J-curve phase. So black is Bitcoin, gold is gold. The global stock market, including dividends, is in red, all in US dollars, and Bold is there in blue. And it's pretty interesting that Bold is ahead of both Bitcoin and gold. How is that possible? So this slide just shows you, we've removed global equities, and instead I've replaced a dotted line, a sort of orange dotted line. And that's the average return of Bitcoin and gold. So you could say it's a 50-50 Bitcoin gold strategy, but it isn't. It's the average return without rebalancing transactions. And crucially, Bold did have rebalancing transactions. And so the result is the return of Bold over the period has been steadily gaining on the average of the two assets. And that's a unique feature of this index. I can illustrate that excess return from the returns of Bold over the returns of the average. And right now it looks pretty spectacular, of 150% higher since end of 2017. And I don't think it's, I don't want to get people to get too fascinated by the spike, but obviously gold's behaving it's very, very strong at the moment, and it's got a lot, it's 2/3 gold. So of course it's doing very well and Bitcoin's doing badly. But it's the red line that I'm most interested in, which is there's some kind of trend outperformance from annualized rebalancing transactions in this asset pairing. Now, the weak bits in 2020, 2021, and 2024, those are all times when Bitcoin surged and massively outperformed gold. And this recent one is when gold has massively outperformed Bitcoin. But nevertheless, it's the average that I think is so interesting. So what is, but going back to the volatility slide, we've got Bitcoin and gold on there, Bitcoin in black. And the volatility of Bold currently is the same as gold. And, through most of its history, it hasn't been materially higher. Now, that wouldn't be true if these assets were correlated. Again, if you did gold and silver, the volatility would be in the middle of the two assets. Ethereum and Bitcoin would be in the middle. But because you've got low correlation, then you really get something special out of it. And there's a diversification benefit from combining these assets. I can show that same idea, but throwing in the Mag 7, 7 of the world's biggest companies. Tesla doesn't quite make the top 7 anymore. I think it's number 11. But nevertheless, Bitcoin and gold, very low volatility, lower than Microsoft and Alphabet and things like that. Bitcoin's in line with Meta and less volatile than Nvidia and Tesla. I don't think many people know this, so I just show it to remind them that this is a very calm way of owning these assets. Drawdowns. Everyone knows that Bitcoin goes down a lot from time to time, 80%, 70% in 2022. Gold much less though, although it did have a big drawdown in 1981, 82, and also in 2013, 14. So, gold knows how to go down, although that's not quite shown on this chart. But the drawdowns of gold are not materially worse than gold itself. Sharpe ratio, geeky fund managers know what this means, risk-adjusted return. So using our time frame, Charlie's fabricated time frame from the high at the end of 2017, so as not to overinflate Bitcoin, you get a 24% annualized return from Bitcoin, 21 from gold, and 26 from gold, as we showed earlier that it's outperformed both. The volatility over that 8-year period, although Bitcoin's volatility is much lower today, over the whole 8-year period is 65%. Gold 14.5, gold 18. And divide the return by the volatility and you get the Sharpe ratio. And gold has a pretty significant Sharpe ratio. Now, gold doesn't normally have 1.43. That Sharpe ratio has doubled over the course of 2025 as the price has gone nuts without a material increase of volatility. But gold was always up there anyway. So there's 3 reasons to own gold. I mean, you should own Bitcoin and gold if you want to. I mean, if you like gold and you like Bitcoin, own them. But why would you own gold rather than Bitcoin and gold? Well, first there's risk management through the asset allocation. So optimizing the amount of risk in each asset, not the amount of money in each asset. The second is the excess return from rebalancing. Although it's 150% over 8 years, as I showed, I think it's more reasonable to say 5 to 7% per year. Seems to be a consistent target. And then the final reason is peace of mind. Why take the risk of owning these things separately when, quite frankly, together they work so well? And so that's it. Isabella, you didn't interrupt me. I was surprised. I thought you were going to attack me on a couple of slides, but we can now just morph into a discussion.
I mean, you explained it very eloquently, so it was hard to tear you apart on anything. I mean, the proposition is obviously one about, I guess it's about creating an asset class that gives you, as you say, exposure to these potentially volatile assets, but in a more risk managed way. But who really is the ideal kind of client for this product in your mind?
Well, I mean, obviously, I came from the wealth management industry when I was at HSBC, and I sort of cooked up half of this idea whilst I was there in 2013, 14, 15, but hadn't sort of thought it through properly until much more recently. But it was for the wealth management industry because I just had this vision of having a client meeting and you're going to have a terrible conversation about gold where you get told how clever you are for owning Bitcoin or vice versa. And I thought, well, if you could put them together, then wouldn't that solve, that's in my 3 reasons of why to own gold. That's the 3rd reason. And it only occurred to me later that actually the low correlation had such a huge benefit, bringing down the volatility. And you get more than the average. People think the misconception is that gold gives you the average return and the average risk. It doesn't. It brings down the risk and gives you an excess return. So who should own it? Well, it was designed principally for the wealth management industry. And I guess institutional investors don't need to buy any products that come from 21 Shares or ByteTree, but they can certainly follow the process. And by the way, if big money did own Bitcoin and gold in this way, it's dampening volatility for both assets because they're buying low and selling high. So it's not like it's a momentum phase that's a momentum strategy that's stirring up the market. It's doing quite the opposite. So, I think it should have broad adoption for anyone who wants to have, let's call it a monetary hedge.
And I mean, do you think that this is a better way to get exposure than to Bitcoin if you are a bit, if this is your first foray into crypto as an institutional client or investor?
So I think if is that an ETP question, an ETF ETP question, or is that a it is, yeah. I mean, crikey, I think you'd be nuts to go into hardcore blockchain land if you didn't know what you're doing. Do you not think? I mean, it's a mad place.
So tell us a little bit more about how you manage the other sort of risks in terms of, you know, we hear a lot about hackings and about, you know, the security of the assets under management. How are you managing that?
So we don't. I mean, that's 21 shares that do that. But I guess I can tell you what they do. Um, and they've been around since 2018. They're a $10 billion AUM company in basically everything they do is crypto apart from Bold. And they use custodians, they use Copper, and they have used Coinbase as well. And for the gold, we use JP Morgan. So we're basically applying the same standards to our gold, which is allocated LBMA gold, the real deal, with what they do with Bitcoin. And I mean, one of the things about Bitcoin custody, there's never been a problem. No professional custodian has been hacked. And in all the years that they've been around, which I think is probably about 10 years. And I think that's, from Grayscale were operating in 2013. I've never heard of a story of that happening. So, all the dangers in Bitcoin security have basically been private individuals who have been phishing scams and those sorts of things. But above and beyond that, there's also insurance. So I do think that there's a pretty rock solid custody case here. And also 21 shares of, for the rebalancing transactions. If you do those inside a wrapper like a fund, then they're not taxable. So if you did it yourself, you'd be paying capital gains tax every time you rebalanced. You would have more trading slippage. I mean, 21 shares trade gold for the rebalancing at 3 p.m. on the last working day of the month, which is the London fix, the London gold fix. So, huge liquidity. And so we can, very easily do those things very professionally. And I think they've done a really good job. So I'm very pleased with them. But I suppose the other way to answer your question is, should they buy gold before they buy Bitcoin? Well, it is a stepping stone, isn't it? You know,
It's
to
like
get
owning a
straight into
hybrid,
Bitcoin.
like before you go full electric, you own a hybrid.
I suppose so. Yeah. Why not?
Um,
You own a balanced portfolio before you own an equity portfolio.
right, exactly. And and do you think obviously the market became quite crowded with sort of Bitcoin treasury companies? How how does that competition, fare against something like Bold?
Well, it's funny because we're the opposite of a treasury company because they wanted volatility so they could issue options and convertible bonds and things like that. And so you took MicroStrategy as being the poster child. I mean, at one point it had 120% volatility, holding an asset that was sub 40%. And then they sold options on that, which have a value. I mean, you'd have to understand a little bit of finance to understand that it's mad that you can sell a thing called volatility and call it an asset. I mean, it is very much a virtual concept, but they did, and so they sold these convertible bonds on very attractive terms for them. With a very very or zero yield in many cases. So they like volatility. I was trying to get rid of it. I guess this is the asset manager's approach. If you're a multi-asset investor and you're thinking about how to construct a portfolio efficiently for the best outcome over the medium to long term, then you'd look at this and go, okay, yeah, that makes a lot of sense.
So where are the vulnerabilities or risks?
Well, I think that if Bitcoin and gold become correlated,
Mhm.
then you lose the alpha. It doesn't. You don't get Zulu out of it. It's not like the thing's going to fall apart. It's just the outperformance will wane. But there's no evidence of that happening yet. I think that the central banks don't own Bitcoin and institutional investors barely own Bitcoin. So it's a peripheral of Wall Street. It's not a cornerstone asset. And gold, frankly, is the same. The central banks own loads, and Wall Street owns quite a lot. But it's not like every portfolio you ever see is stuffed full of gold. So I think there's this gold bull market could go on for quite a long time, justified by what we're hearing from around the world. Whether it's the conflicts or whether it's problems at the Fed or monetary policies, yield curve control, whatever it is. There are just so many reasons to distrust the financial system in a way you wouldn't have done in 1982, when they seem to have just got it all in order.
So why do you think the gold bugs and the kind of Bitcoin bugs, as you might describe them, why are they, what they've predicted hasn't necessarily mapped out, at least not the Bitcoin bugs, because they were positioning Bitcoin as a substitute for gold, and actually it looks like it isn't at all the kind of ultimate risk averse product. In fact, right now it's falling.
Yeah. I mean, I have a very simple answer to that, which I don't think is very popular with the Bitcoin maxis. And that is that gold is the reserve asset of the real world, and Bitcoin is the reserve asset of the digital world. And they're different things. And the problems we have in the world are not digital problems, they're real world problems. Ukraine and Venezuela and Greenland and Fed, they've got nothing to do with Bitcoin. The internet's doing very well, thank you very much. It's probably slowing down a bit because it's been on a surge since the pandemic. It's been doing very well for 25 or 30 years. Or if you're really clever, probably 35, 40 years. But most of us hadn't heard it until the 90s. And so Bitcoin, I think, is just following the trajectory of the digital evolution. And the internet's now got its own assets in the form of crypto, and therefore can transfer property. And that's not just magic coins like Bitcoin, it's also stable coins. And so there are real world applications coming out of this when you can transfer property on the internet. And I know you're a big fan of the stable coin. But the clients write into ByteTree, they write in regularly with the same question. I don't get it, Charlie. What is a stable coin? What's the point? I've got digital money. With your bank account, you do not have digital money. You don't. You're going through the bank from A to B via the bank. And with a stable coin, you're going from you to the recipient across borders if you want to, without a bank in the middle. So it's cash. It's literally a tenner that you stick down the phone line and ping out the other out the other side of the world it comes. And these are remarkable things, and they're real things. And so there's a lot of sort of Bitcoin naysayers still out there in traditional finance. Probably I don't be rude about old people, but I'm an old person. But over 50 people over 50 who just sort of all they remember is the Silk Road and the Mt. Gox crash and Sam Bankman fraud and those sorts of things. But Bitcoin never did anything wrong. It was the people who interacted with it. It's never missed a beat. The blockchain's always worked. It's always settled. And that's what I'd highlight. I'd also highlight that gold and Bitcoin are both neutral assets.
Mm-hmm.
And they're globally accepted and they're global brands. And they're the two most liquid alternative assets in the world. Another really important point, gold is $150 billion a day, similar to the S&P. Bitcoin, $40 billion a day, way more than silver. And so you've got these low correlation, highly liquid assets. And so this is and you're balancing risk on, risk off. And so this is kind of like the simple way to play the growth in the global money supply, the chart on the screen right now.
Well, I was going to ask about that because I think, I've heard it said a number of times that really, if Bitcoin is an indicator of anything, it's global liquidity, in a way that, historically we would always say gold had an inverse relationship with the dollar, for example. But I think with Bitcoin, there's this extra variable about it being an indicator of excess liquidity, I think.
Yeah, that's probably very fair. And interestingly, we haven't had an altcoin rally, so that's the junior Bitcoins, i.e. not Bitcoin, but the other stuff. Mm-hmm. We haven't had a proper one of those since 2021. So, and again, that's sort of borne out on the screen, that 2021, look how the money supply had really surged into it, that red line charging 2020 to 2021. That caused an alt boom. We haven't had one since. So we've got plenty of liquidity, but not that much. But if we get an alt boom, that is telling us that there's too much liquidity in the system. When Dogecoin goes up, worry.
Yeah. And do you think, can you see Bold evolving and having any sort of, have you started thinking of any other sort of altcoin derivatives that might also, work in the future, or are you quite committed to it just ever being Bitcoin and gold?
Well, I'm committed, but obviously, I'm always thinking about other things and how you could develop something. And um, I tried to put directionality and forecasting into this. Is there a way we could enhance it? I've just never had a idea that stacked up. And there's plenty of ideas, but none of them that stack up in a way this one does. It's the simplicity that I like so much about it. And also, if Bitcoin was going to zero, the volatility would rise as that happened, wouldn't it? And so your weight would come down. The Bitcoin maxis were right and gold was a barbarous relic and Bitcoin was going to become the reserve asset, well, gold's volatility will go up and its weight will go down. So there's a nice long-term, medium to long-term self-correcting mechanisms here. Why is Ethereum not in? Well, I said earlier that Ethereum Bitcoin rebalancing doesn't add anything. But also you bring down the volatility and bring down the liquidity and you increase the volatility. The same if you bring silver in, you'd increase the volatility and reduce the liquidity. So, cut to the chase, stick to the big ones, and that's why this is as it is. And I think as people are sort of skeptical about gold because they say, well, I just own Bitcoin and gold, I got it. And say, well, there's another dimension. Are you rebalancing regularly? Are you maintaining that risk? And if you are happy, we want to own Bitcoin and gold. I still say use the index. And by the way, we publish the data for free, and it's not particularly difficult to calculate yourself. So it's the concept that stacks up, I think, and that's also very important. But here, this money supply chart. The left is $60 trillion in the G20 of M2 money supply at the beginning of 15, and that more or less not quite doubles over the next 10 years. But the bold return is, 6x that. There's a natural leverage into that increase in money supply. And the correlation here, by the way, the global equities will also correlate with that, but not as tightly as bold does.
And how do you see the current sort of regulatory climate regarding products like this?
Well, I mean, Bold's on the London Stock Exchange today, so I'm delighted with the regulators. I might not have said that 4 years ago, 3 years ago, 2 years ago, but on this day, I'm very grateful to the Financial Conduct Authority for allowing Bold to be on the London Stock Exchange.
And do you have any, what would you like the performance to be like? I mean, what have you got any targets? What would make you happy?
I think I'd be delighted if this became a thing, and I think that if I mean, so today the Bold ETP's got $40 million in it, so obviously you want that to rise. But I think what would make me really happy is if it grew with other people talking about not just about Bold, not just me. I mean, my analogy there is the S&P 500. No one calls Standard and Poor's for a view on the S&P 500. No one calls FTSE for a view on the FTSE 100, the stock exchange. And so I just like people to be talking about Bold. And I think if people did talk about Bold, then everything else will take care of itself.
Like the VIX or whatever. And I mean, so tell me how would you see that happening? Like, do you see it in the sense that, like, in the morning we're checking in on global liquidity and we see that Bold's gone up today, so it's an indicator of what in your mind?
Maybe. I think that gold is obviously, I mean, gold really stands out at the moment because it really is in the thick of it, and Bitcoin is the sort of leverage version. Sorry, silver's a leverage version of that. So obviously silver steals the limelight. But these things change quickly. I mean, people were talking about Bitcoin 6 months ago. Now they're not. So, but I put that down to the fact that the Mag 7 have done such a good job in the last few years that they're just sort of exhausted, pausing for breath. 10 stocks, I was writing about this morning, 10 stocks, 24% of global equities. Yeah, I'm not talking about some index, I'm talking about global equities. And that's absurd. And it's unprecedented. And so that's going to cool. And as that cools, there'll be alpha distributed around the market to mid and small caps over time. And so that would be very exciting, and to the rest of the world. So it's a great time to be a diversified global investor and embrace alternative asset classes, because the indices have done so well in the last 10 years, and they're exhausted. So yeah, but I mean the S&P 500 principally. Yeah.
And obviously you're listing today on the London Stock Exchange, but you're also listed elsewhere, right? Tell us about where else you're listed.
Yeah, Switzerland on the SIX exchange in three currencies. That was to the 27th of April 2022, followed by Frankfurt, followed by the Netherlands and Paris, and more recently Sweden. So we've got all those listings, and the Europeans have been great, and the UK investors who have declared themselves as elected professionals and have been able to trade that way as well. So some people here have managed to buy gold, but it's been difficult. And I think, when you sort of logically stack it up, it's hard to understand why it's been so difficult, because it's really not a particularly dangerous asset. If Bitcoin went to zero, which I presume is one of the risk managers' fears, well, if you're two-thirds not Bitcoin, then there's that. So there's so many reasons why this isn't a particularly risky product, but it will be pitched as such, and it would be pitched as such if it was 1% Bitcoin, or if it was 100% Bitcoin, it would have the same badge. But
I
I
mean,
think,
do you think generally, like, we're now at the phase where Bitcoin is being normalized? I mean, the really big institutional players, BlackRock. I mean, even Jamie Dimon has changed his tune about Bitcoin. I mean, are we at a point where Bitcoin has now properly grown up, and it isn't going to be seen as this wayward, crazy, sort of risky asset the way it used to be?
yeah, so I think a private investor can now buy Bitcoin ETFs in the UK, for example, but they can't do it on Hargreaves Lansdown still.
Hmm.
They can't do it on HA Bell. They can't do it in Japan. They can't do it in China. They can't do it in India. They can't do it in Singapore. The Channel Islands could, but they don't.
Hmm.
Ireland have resisted. I mean, I would, are there any wealth management firms, meaningful, sizable wealth management firms in the UK that own Bitcoin? I don't know. I doubt it. If so, they've kept quiet.
Right. So it's not quite arrived yet. So there's a lot of room to there's a lot of market out there for you to potentially attract into bold as a result.
Yeah, it's very similar to trying to, get into an old boys club, like a golf club or something in the 1950s. If you were a lady, or if you weren't white or something, it's the same sort of prejudice, but with an asset. And I think that, I see it as a prejudice, because that's how it feels when people look at you. And people used to take me seriously, and then when they found out I liked Bitcoin, they would say, "What happened what went wrong with Charlie?" Yeah.
So why do you think that is? Why do you think
It's a
it has this prejudice against it?
Um, I think they don't understand it. They wished it went away, and then they were caught short. And so, the ban came in October 2020 at 10K. You can imagine regulators and Number 11, or whoever was in the Bank of England, all these people who were involved in the conversation say, "Oh yes, well it'll be a dollar within 6 months, and we'll look brilliant." And then of course it goes to $100,000 rather than to $1. And so there's a sort of caught short element to it, isn't there? And I think that the PR around the UK Bitcoin launches was beautifully managed. It's been a very quiet affair.
Mm.
No one's really paid much attention to it. It didn't really make the headlines. Compare that with the US. Compare that with gold in 2003 when that came to London. And that was a fanfare. I mean, we were all, because you were at CNBC before, and we knew each other then, and the gold ETF launches were huge,
Mhm.
in London and in Wall Street. Even Australia, they did it first. There was a lot of noise about that, and people were snotty about gold coming into portfolios because they sort of thought it was a barbarous relic, and it'd been going down for 20 years.
Huh. Do you know, I actually remember being on the Reuters desk, commodities desk, when talk of the original sort of gold ETF I think it was the gold ETF being launched started, and everyone was worried about the impact. And then and I do remember that very clearly. That was ages ago. So then there have been these sort of periodic, I guess, panics about whether or not huge amounts of investor inflows will in some ways lead to shortages, squeezes, and dysfunctional trading and externalities, right? So I guess what you're saying about the fear that they were caught short with Bitcoin, they wouldn't be able to manage a giant sort of inflow of investor money. I think that makes a lot of sense. But do you think that is still the case now?
But I still think there's a prejudice and a lack of understanding and wish it would go away.
Mm-hmm.
I'm sure that the grown-ups in the financial services industry would love it to just not perform ever again, and they can just carry on looking at dividends. I have little doubt about that. But I think they're wrong. It's going to go up. It's going to, I'm not sure when it's going to go up, but presumably when gold stops going up, whenever that is, if the bold thesis has anything to offer there. But even that's not a prediction. It's just an idea. Certainly, we see the money flows in and out of the ETFs go, into gold, into Bitcoin, into gold, into Bitcoin. And so the price doesn't necessarily perfectly correspond with that, but certainly the cycle of investor behavior seems to do that quite effectively. But can we go to Alphaville and tell me about your journey through Bitcoin
Oh,
over
wow.
the years?
My journey, I mean, so I started off as a skeptic, and I think that was fair because when something new and you know, you know, but I don't want to overuse the word bold, but it comes on the market with very bold claims, right? You've got to be a little bit suspicious. You've got to like really kick the tires and figure out if this thing that everyone says is going to change the world really is what people say it is. And there are so many stories of things being disruptive and then they turn out not to be, or vaporware, especially out of the tech industry, looking back just at .com and or as Paul Murphy used to call it, the .comedy. It did all seem very larger than life, and it was mysterious, and people didn't know where it started from. And I think it took a while for people to educate themselves because it was complex, and most people don't have the technological understandings. So people, especially journalists, like to mouth off before they really understand things, and you end up kind of parroting what you hear, and you get this sort of Wurlitzer effect, I guess, where lots of talking heads are saying the same thing just because it sounds smart and somebody else said it, and you're not necessarily representing the fundamentals because you haven't done the work, I think. And I'm not suggesting, I would say I was the opposite. I think I was very much trying to do the work, and I was scrutinizing Bitcoin very thoroughly. And a lot of the time, I think it wasn't a perfect instrument in the early days. There were many problems with it, especially from the architecture and the design. And there were a lot of false claims about it in terms of revolutionizing, the cost of payments. I don't think it's, there are many critiques, I think, that were fair and that have stood the test of time, especially in terms of the low cost factor, because yes, they've engineered new second layer type solutions to enable cheaper payments, but Bitcoin itself was there were complexities in terms of reducing costs. So I think there were fair criticisms, and I think that's how it should be. Like, you criticize it, but eventually, if it withstands your criticism, if you don't change your tune, you're the idiot. So I felt I had to start to kind of acknowledge its robustness. And also, I think the moment for me where everything changed was actually 2020, where I saw the real first use case of Bitcoin, because I did think, I mean, whatever people think, it was a very strange moment in time for all of us, COVID, and suddenly I saw the potential in a alternative asset, in a free market. Let's just say that. Whereas before, I had a lot more trust in centralized systems and in top down, banking systems generally. Whereas I think in 2020, I realized that actually in a free market, you need to have all options on the table, and there's no reason why Bitcoin shouldn't be part of the conversation. And since then, I think it has performed. It has impressed me in terms of its ability to withstand, or as you said earlier, like it's never really been hacked. Yes, the third parties who have been managing Bitcoin, as you mentioned, Sam Bankman fraud, as you called him. There's all sorts of scandals all the time in terms of the third parties, but the core architecture, I think, has really, stood the test of time so far. I don't see that changing anytime soon, but who knows? I don't want to be caught on the wrong side of that either. But I technologically, it seems to be really quite unique.
Yeah, I think that, it's interesting what you said, claims. You said, Bitcoin made claims. People made claims.
Yes, of
Bitcoin
course.
never made a claim. I mean, one of the things I love about Bitcoin and gold is they don't have a CEO, a management team, a head office. They're just things that are out there, these neutral assets, which no one's in charge of. And that makes them especially wonderful.
It's a type of commons, and I think that's what's so interesting about it. It's turned banking into a commons, and people can either cultivate and help to kind of grow the commons, or they can try to suppress it. But I think now it's out there. It's like it's an idea that you can't roll it back. And what I think what the skeptics and the critics miss is that the real innovation, I think, in Bitcoin is the proof of work idea. And people always say, like Nouriel Roubini or whoever, is, oh, you can just replicate it. And I used to say that myself. But what the big epiphany I think I had in 2020 was that you can't ever go backwards in time. Bitcoin will always be the first. So
Yeah.
it will always have that first mover advantage. And because of that, it will always have the most secure system in terms of the proof of work function. So that makes it unique in the crypto space as a whole.
Yeah, and I think that to follow on from that, Warren Buffett, and I'm a big fan. I did the pilgrimage to Omaha in 2011, and always have been a fan, always will be. But the only thing I've ever disagreed with him, he said, if you offered me all the bitcoins for $20, I wouldn't take them. And I think what he's misunderstanding there, and we can go and recreate, as you've just alluded to, that we can go and make a new Bitcoin quite easily, right? It's not a difficult thing to do, but it doesn't have the proof of work. But if you owned all the Bitcoins, even if you managed to get them for $20 rather than 2 trillion, then they'd be worthless. And my joke would be, not particularly funny joke, but it would be, it's a bit like buying all the telephones. You'd have no one to call. So the value is in the network.
Yes.
And it's the fact that everyone else has got a Bitcoin, you've got a Bitcoin, they've got Bitcoin. That's why it works. That's why it's a liquid market. It's that liquidity that has the value, and backed by security of the blockchain and the proof of work, as you say. Kit, you must be dying to ask Izabella something.
Yeah, I just wanted to actually to dig in a little bit more when you say in 2020 the trust that you had in the previous banking system sort of fell down, and whether you could elaborate on that a little bit more, because I don't think I fully understood.
Well, I think there was a lot going on, and I personally, up until that point, I think I trusted the system as a whole, and there were many things going on that made me a little less trusting in the establishment around then in terms of mainstream narratives, whatever. And not being able to question things really bothered me as a journalist. And I felt there was a general where I don't want to deflect the conversation too much away from Bolt, but there was a spirit of what I would call censorship in the air around that time, and that's why I think I suddenly saw a different dimension to Bitcoin because of its alleged censorship resistance. And then you saw, like, I think the real moment for me also was the Canadian truck driver thing, where I was quite shocked that people, that governments could restrict access to money amongst a large group of sort of compliant and mostly law-abiding citizens. So I thought from that perspective, it's important to have a hedge. And I think, Bitcoin had been, I think, mischaracterized until that point as, the censorship resistance was mostly useful to the criminal underclass and people who want to use it for nefarious purposes and evil. Whereas actually there's another side to that, which is that you need censorship resistant assets to allow for people who are oppressed to be able to speak out. And if it wasn't for Bitcoin in a system, in a technological system that is increasingly like totalitarian in terms of the infrastructure, like because of whether it's platform, I'm talking about not governments, I'm talking about sort of tech platforms in general, like it's the unicorn story, there will only be one kind of mindset. Well, in that sort of space, I think you need an alternative system, whatever it may be, whether it's Bitcoin or crypto, or some other mechanism to maintain personal freedoms. But I think crypto is a good start because most things start with funding, and if you can't get independent funding, you can't push back against the system. And I'm a believer in free markets and in having choice. And so I'm not saying that the core banking system is corrupt and you shouldn't use it. I think it's very important, and I think for most people it does the job, and it's really more user friendly in many ways than most of crypto. But at the same time, I think crypto being there ensures the banks are kept on their toes, and that they can't just get complacent, they have to compete. And in that way, I think there's a nice synergy between both forces, because I think you will always need centralized systems. I think I'm not somebody who's I'm not a total Bitcoin maxi who thinks it's going to be Bitcoin and only Bitcoin in the future. I think the future is a mix of different systems, but it's the presence of all the different systems that keeps the overall system honest, if that makes sense, because they're all competing against each other. So when one gets overly powerful and impossible to control, or push back against, at least you have that alternative in there.
So I just wanted to mention that, I'm not sure if I probably skipped over it, but in this box here, value, we include financials, the banks. The banks sit in the same box as Bitcoin. Banks have done really well in the last 2 or 3 years as interest rates have been surging, and inflation has been firm.
Yeah. Well, yes, exactly. And so that's another interesting dimension to the whole Bitcoin argument. It's like, should the banks be beneficiaries of the current environment and of the kind of they've been kind of they've been locked up in prison for like a while, and now suddenly you've got all those nice rents coming back. But is that really fair given what has happened with QE and whether taxpayers really got value for money? So I don't know. I think that's a really good point, that you have now another mechanism where maybe you can divert some of those rents to excess returns in bold.
Yeah, and if you look at Venezuelan stock market, as I pointed out a couple of weeks ago in a note, that the only stocks left, apart from one alcohol stock, were basically financials.
Oh, really?
So they, ultra high interest rates, hyperinflation, they survived. They did in Zimbabwe, they did in Argentina. The banks just hang in there through thick and thin.
So that's interesting. I didn't know that.
Yeah. Well, I mean, the Weimar Germany, I mean, they've all done it. They don't like it. I'm not saying they outperform necessarily with hyperinflation, but the thing about hyperinflation is the casualty is the number of stocks in the index. They all disappear.
Mm.
So people focus on the value of the index, which after all the stocks have disappeared, or most of them, even in Turkey and places, then it just becomes a real asset and a good inflation hedge. So once you've derated, lost all the stocks that can't handle it, what's left will be fine. But it is one of those things. But I find it hilarious that banks and Bitcoin sit in the same box. I think most people think banks sit in equities and growth. You know, they sort of like the world to be low inflation, low rates. They don't really. They,
No.
no, they like the gift of free money from the central bank.
Well, yeah, because it's seniorage. I mean, they're
Yeah.
basically, there is the way I see it is there's a sort of set amount of seniorage out there for the taking at any particular sort of economic cycle point, and it's just a question of who gets it.
Exactly right.
Yeah. And sometimes it's the banks, or in this case, maybe it's the those exposed to Bitcoin or bold. And really, it's nice that there's some alternative mechanism. But I also think that's probably why you've had so much trouble, or not you personally, but why Bitcoin has had so much trouble, because it is. I mean, whether you can talk around it, but ultimately, I do think it is a bit of a threat to the banking.
Yeah. I mean, it's not money in the sense you buy coffee with it. I mean, I think people figured that out 10 years ago or more. But it is genuine value sitting on the internet, and
Yeah.
come around to that idea. And once you've got value, you can do clever things with it and break it up into little bits that you can buy coffee with, or stable coins, or whatever, or interact with a Visa card, or you know what I mean. There are technologies you can do, but the point is, it's created value on the internet, and I think that's just amazing.
I agree. And I don't mean to be too much in agreement, because I know I'm supposed to be skeptical and asking hard questions, but I do. I agree.
But I think, Kit, I think she likes it. I think Izzy likes Bold. Is that a fair statement?
Well, I think that's a well-versed pitch you've got there, Charlie, and it's done
Do I have the
wonderful.
advantage because I've done it so many times, this pitch?
I obviously don't endorse financial products as a journalist, but I mean I see the logic in it, and I think it's very interesting in terms of the design. And as you say, when you told me about the volatility, I was really shocked, because I didn't realize Bitcoin's volatility had fallen so much,
Oh
and,
yeah.
and that chart with Nvidia and Tesla, I mean, that
Oh
is
yeah.
very surprising. I really didn't know that.
And if I could ask Isabella, I mean, you asked Charlie a question about the treasury companies, but that must have been something that intrigued you and that you looked at in the last couple of years, and that was sort of the only option for many people to invest as a vehicle to get to Bitcoin. What was your perspective on that over the last sort of 24 months?
Well, I mean, I think, reflecting on it, it seems like, I mean, I don't think it's controversial to say the treasury concept was a hack, right? It was a way around regulators banning access to Bitcoin, and it was a very clever hack, which kind of snookered the regulatory complex, and they had to figure out whether they would allow that, or they could move to, push ahead with allowing access to Bitcoin in some sort of controlled way. So I think, it's not surprising. I mean, Bitcoin came out of the hacking space in many ways. They have they've taken the really interesting thing is how that hacking mindset has approached regulation in and of itself. I don't think the regulators, they're not a hacking mindset type of entity. Like, regulators haven't really had to deal with. Well, maybe they are. I don't know. Maybe you could think of banks as the original hackers, um, but I do think they didn't really see it coming, and so it's just been very interesting to see how popular those treasury ETFs were, well, treasury companies were, and how I mean, MicroStrategy was a phenomenon, right? Love him or hate him, Michael Saylor, everyone knows his name. I mean, he's really on another level in terms of Bitcoin personalities, and it was such an easy thing to emulate and very difficult for regulators to control, I would say. So yeah, I think this is the inflection point, and we'll see. I mean, whether they'll continue to be as popular is, I think it's probably doubtful that they will be as popular now if access becomes unrestricted to Bitcoin ETFs. I mean, they've served their role almost, I think. That said, I think there's been a lot of negative news about MicroStrategy in the last few weeks, and the premium seems to have somewhat disappeared. So I don't think he's quite in trouble yet, but it'll be interesting to. It's definitely watch this space. Will MicroStrategy be able to survive any sort of Bitcoin winter in the next? If the winter gets any more intensive, like I don't know. What do you think, Charlie? Do you think if MicroStrategy fell apart, do you think that would have meaningful consequences for Bold and for the market in general?
I I'll go back one stage further and say that when the Bitcoin ETFs were launched for retail in the UK in October,
Mm-hmm.
the premium started coming down straight after that.
Mm-hmm.
So, I've always said it was been a MicroStrategy was a regulatory arbitrage. It was always in the top 10 most traded stocks on Hargreaves Lansdown for 2, 3 years, consistently, always there.
Yeah.
And no one seemed to mind. And I thought it was extraordinary that the UK investors were being pushed into a riskier, not riskier in terms of custody, I'm sure he's fine with that, but a more volatile vehicle than Bitcoin itself. So I found that perplexing. And of course, it was at a 2x premium, 3x at one point, I think. And I don't think that the perpetual motion machine works.
No.
So I think anyone who knows anything about finance knows that. And so that was eventually going to fade. But it's interesting that it faded when London ETFs were approved for retail. And I don't think that's a coincidence at all. I don't think it's a bad balance sheet. I think there's nothing wrong with MicroStrategy. People want to buy it. But I don't think it's going to a premium. I think it's just going to go to a gentle discount and possibly a hefty discount if there's a crypto winter, as you say. But if there isn't, it will probably just sort of hang around at like a smelly old investment trust at a 10 discount. Why not?
It served its purpose. I think it was a kind of means to an end, right? I think there's part of Michael Saylor who knows that too, no?
Yeah. Well, he's clever. There's no doubt about it.
Yeah.
But
I'm sure he's got enough personal exposure not to worry.
I'm sure he's a very wealthy man.
Yeah.
It's done all right for him.
indeed. Well, very interesting, all the stuff with MicroStrategy, which has obviously been the headline story for the last 2 years. But as you say, with the change in regulations, maybe that brings us around to a final word on Bold, maybe from you first, Isabella, and then Charlie to finish.
I mean, look, I'm not in the business of selling things. I'm a journalist. My job is, as I said, to scrutinize all sorts of goings on in the finance space. I just think it's an interesting story. I think it's both gold and Bitcoin are the big talking points this year. In 2025 they were, A, because of the outperformance of gold, but B, because of like the Trump administration's very clear embrace of Bitcoin, I think, and the Genius Act and all the other regulatory I guess advances that have now legitimized the asset class. So from a journalistic point of view, where are we going in 2026 is the question, and whether or not we're going to see banks, I think, adopt, or even major institutions adopt these tools in a more concrete way. I think the pathway is likely going to be through stablecoins, but it's all part of the same ecosystem. So I think there's going to obviously be more geopolitical stress, and geopolitical stress is probably a good thing for both. So for both, got Bitcoin and gold in some way. But as you say, there's Bitcoin is also a liquidity measure, and now we are seeing major changes at the Fed. Is the Fed going to maintain its independence? Are we going to see, Treasury, U.S. Treasury take over? Are they even going to start their own sort of special reserve, Bitcoin reserve? So many things going on. I think if I was an investor, I would definitely be interested in having some exposure to that story.
Great. Well, Isabella, I just want to say thank you so much for joining us. And it's a really special day for us here. It's been a long journey for Bold, and we're finally in our home market in the UK on the London Stock Exchange. And I just wish Bold the best of luck in the UK and all who sell in her.
And thanks for having me.
Thank you for coming.
Brilliant. Well, I think that's a great note to end on. Thanks to everyone who's watched. Charlie, 2 hours of trading complete. I hope it's going well. And Izabella, thank you so much for coming on. It was great to hear your questions for Charlie and then also your views as well. It was great to have both. So yeah, that's us for today. Thanks everyone very much for watching and being with us today. Until next time,